Silicon Valley Bank, the 16th largest bank in the U.S., collapsed on Friday as it was subsequently shut down by regulators. Canada's banking regulator has temporarily seized assets of the Canadian branch of Silicon Valley Bank to preserve their value. American banking regulators moved swiftly on Friday to shut down the California-based bank. Now, this was after depositors rushed to withdraw billions of dollars, leading to the second largest bank failure in U.S. history. This comes amid a recent downturn in the technology industry, as SVB was a bank that largely serviced that sector. The developments have left markets jittery and investors feeling nervous. Well, here with us now to unpack this is Dr. Angelo Melino, a financial economist and professor at the University of Toronto. Dr. Melino, welcome to Forum Daily.
Hello.
So can you walk us through how the 16th largest bank in the U.S. collapsed in just under 48 hours?
Well, it was a classic bank run. But being Silicon Valley, people didn't show up in person. They did this virtually using electronic transfers of money. And it was a lot faster. But word got out that the bank was in trouble and everybody ran to get their money out as soon as possible.
And were there any warning signs beyond last week that this was going to happen?
I'm sure in retrospect, we'll find all kinds of warning signs. And I think the people who were close to the bank must have known what was going on. But to be honest, that was not where I was looking. I think we all knew that the financial tightening that's going on in the United States and by other central banks would likely cause some problems. We saw some early signs of that in Great Britain in the fall with their pension crisis. So we didn't know under what rock this was going to come from, but we suspected something would happen. I thought it would happen in the crypto part of the market, to be honest, but it happened there, but it happened at Silicon Valley Bank as well.
And bringing this back to Canada, we know Canadian authorities have seized the assets of SVB to protect creditors. What are your thoughts on this move and whether it's enough to prevent contagion?
I don't think we have any issue about contagion here in Canada. Silicon Valley Bank was a very small part of the banking environment here in Canada. I'm sure its absence will matter for people in the industry. Having a competitor who is dedicated to serving the needs of tech entrepreneurs is very useful for that industry. But in terms of economy-wide contagion, that particular bank is it's just a tiny drop in the ocean.
And staying on the issue of contagion itself, do you foresee this bank collapse maybe having any significant impact in Canada at all amid concerns of a recession or a potential bank crisis?
The direct effects will be tiny. We may see things happening through the Fed's response. The Fed will be looking tomorrow what happens to inflation in the U.S. before it makes its next policy decision. But I'm sure that this banking crisis is, other things equal, going to bring a little bit of caution to the Fed. Maybe it'll mean that it'll rise its policy rate more slowly. Maybe it'll go to a lower terminal rate. And I think that would be the main effect. There could be some knockoff effects. I mean, we have our Canadian banks are very exposed to the U.S. market, and some of them are heavily exposed to California. But it's too soon to know if that's going to matter.
All right, Doctor. Now, just about 2 minutes left here, but what would you say are the best steps that regulators can take both in Canada and the United States to prevent this from becoming a greater issue?
I think in Canada, there's not much for the regulators to do. In the US, it's going to be a trade-off between the short-term benefits and the long-term costs. So the short-term benefits come from throwing everything at it, but that has long-term consequences. We know that too big to fail creates moral hazard problems. And what the Fed has essentially done is a signal that too big to fail is now being passed down to medium-sized banks in the United States. And that means that we're going to have to rely on regulators a lot more than we did in the past to keep the banking sector safe. To the extent that large depositors were also keeping an eye on banks and monitoring them and disciplining them for taking on too much risk, we're going to be losing that.
All right, just about a minute left here, but as this is a continuously evolving situation, what are you watching for next as the Silicon Valley Bank collapse continues?
Well, I'm looking to see whether confidence will be restored in the banking system in the United States. We've seen other regional banks under a lot of pressure today. And even the depositors at the Silicon Valley Bank, whose deposits have been guaranteed now by the federal government, are trying to take their money out, which to me makes absolutely no sense. So people are clearly afraid. There's a lot of panic going on. The safest place you could be right now is in Silicon Valley Bank, and people are trying to take their money out of there. So who knows where this thing is going to go. I think it's going to be contained, but it's going to be a very anxious week. I'll just say that.
An anxious week indeed. Lots to keep our eyes on. Again, Dr. Melino, thank you for your time today.